Good day, everyone, and welcome to the Premium Video Newsletter for June 20th, 2013. Starting with the fundamentals, Bernanke set the record straight Wednesday about the Fed's bond buying program. He said that the Feds expect to scale back bond purchases later this year and end it entirely by mid-2014 if the economy continues to improve. In response, investors dumped stocks and bonds in anticipation of rising interest rates. I guess he wasn't really fooling anybody, and although he said a lot of things, most people interpret it as negative news. The Feds have been buying $85 billion worth of Treasury and mortgage bonds a month since late last year. The purchases pushed long-term rates to historic lows, fueled further by record-breaking stock market rallies. This encouraged consumers and businesses to borrow and spend. In addition, news came out this morning that Chinese manufacturing is indeed slowing down. This further added to the bearish tone in the global economy. Chinese manufacturing is a strong gauge of global demand. As a result of the news, the world currency markets were very mixed. Even correlated currency markets behaved differently due to the narrow impact manufacturing has on each individual country. This is quite common for currencies after fundamental news is released. The U.S. stock market continued its slide today and broke the 1600 level. If you recall, I called the 1600 the next support level about a few weeks ago, and the next level down is going to be near the 1540 level. Another telling sign that strong decline would occur was the gap down this morning at the opening bell. The U.S. stock market doesn't gap down too much, but when it gaps down, especially to the downside, you want to make sure and pay attention. So when you have a support level broken with a gap and there's fundamental news to back it up, it's a strong signal that distribution is occurring. Looking at the daily chart of the U.S. stock market, you can see that the RSI indicator is still relatively far away from oversold price levels. Further, there is substantial distance between the current price level and the next support level of 1540. I anticipate further correction to occur during the next few trading sessions before the market is technically in oversold area. Another indication that this drop may continue further is the ratio of stocks making highs versus making lows. The ratio during oversold levels is usually about 10 or 20 to 1. Right now, the ratio is about 5 to 1, so this tells me that there's substantial fund selling that still has not, I repeat, not taken place. The funds are capable of unloading large blocks of shares rapidly. Moreover, the funds sell baskets of stocks and not just individual issues. This is why I look at the ratio of stocks making lows versus highs. If you recall, when markets are overbought, the ratio was well over 10 to 1. So I'm thinking this market has more to go to the downside in this case. The 10-year bond continues moving lower. Most traders begin liquidating before the close because on a short-term basis, the bond market is oversold. The 10-bar modified RSI is approaching the 20 level, which is a substantially oversold price level. Most traders who follow this service know that RSI is not, I repeat, not a very sensitive indicator. So when it reaches oversold levels, the majority of the time, there's some type of a pullback. Two positions that were filled today at the open were BEN, maintained the position with the buy stop level at 150.150, and hold the position till tomorrow morning. The position is currently ahead by about 7 points. So if you can take profits near the current price levels, I suggest you do so, because we will have a bounce from this price. I anticipate tomorrow morning for the stock to open a bit lower and rally for the first half hour of the day. The stock is currently volatile and liquidation at this level is recommended. The other fill this morning was on Portland Electric, ticker POR. The stock had a 4x4 entry trigger to the short side this morning. I recommend you hold this position for the next few days, as it's moving relatively slowly and didn't seem to overreact to the volatility today. Place a buy stop at 31.40 and let's see what happens during the next few days. Lastly, Pfizer ticker PFE is also once again starting to edge in our direction. With the downslide in today's market, it would appear that the stock is relatively strong compared to the market, which is opposite of its behavior for the last 2 weeks. This makes me very cautious about the position. Maintain original stop and watch it for the next few days. If the strength continues, we will liquidate the position. That's it for today's tutorial. Tomorrow will be volatile. I'm expecting some correction because of the oversold area we're at. I will update you tonight or tomorrow morning with the latest. Good night, everyone.